The jobs numbers will be closely watched, but what will it mean to the market? Let's bring in Nick Santiago, CEO of In the Money Stocks. Nick, you tend to say the jobs report is not that critical to the stock market.
I'm still in that camp, Ange. I don't think it is that critical. I think right now the market cares really about a couple of things. It cares about what these regional banks are doing, which, as you know, are getting clobbered almost on a daily basis. And that's really the big problem. And the other problem is, there's still an inverted yield curve between the 2-year note and the 10-year note. And that's a big problem as well. So I think that's really what the market is focusing on. The jobs report, we get them every month. They're a lagging indicator. The bottom line is we're seeing a lot of mega cap companies laying off or big corporations laying off, and that eventually trickles down to the smaller businesses. So that's going to be a problem at some point. But right now, I think the market's really just focusing on the regional banks and the inverted yield curve.
What's your trade of the day?
Well, I've already started to get into a NASDAQ short and via the PSQ, and I'm getting ready to ultimately short the Russell 2000. I haven't done it yet, but that is going to be my next trade here, probably shorting the Russell. I just can't see how the small caps are going to hold up in this kind of environment. And I think the market right now is really just depending too much on central banks to save the day. And we've had a great run. The bounce has been incredible, but I think the party's over.
Wow. Thank you very much for that warning.
Thank you for having me, Ange.
Go to businessfirstam.com for where to see our show on TV.